In this video, I'm going to break down for you the implications of a new tax law which impacts all software development jobs in the US and especially significantly hurts the startups. My name is Anwar and I've been working as a staff data scientist in some of the big tech companies in the US for the last 15 years. For the last 6 months, I've been extensively analyzing the US tech job market, and I've created different videos around this topic. And a lot of feedback which I was getting in the comments was to analyze the impact of Section 174 on the US tech job market. So in this video, I'm going to go over what are its implications on the current tech job market and how much could it influence the future of tech jobs in the US. Section 174 of the Internal Revenue Code deals with how the research and experimental expenses will be taxed. Based on this recent change in this tax law, any software development expense would be considered a research and development expense. Now, on surface, this might sound like a subtle difference, but when you look at the tax implications of it, these are huge, especially for the tech industry. And the reason is that previously, a software engineer's salary could be considered a business expense like any other salary. But after this new tax rule, it is not considered just a simple business expense, it is considered a research and development expense, which cannot be deducted from the business income entirely in that year. Let's look at an example scenario to further illustrate this point. Let's say there is a startup which has just 5 employees, and in the entire 1 year, it has a total revenue of $500,000. Now, each of the 5 employees, let's consider they are software developers, and they're paid $100,000 per year. And for the simplification of this example, I'm not considering any other expenses like rents or etc. And then $500,000 of expenses in terms of salaries for those 5 engineers, then the business is just breaking even with no profit and should not be owing any taxes to the IRS. But in 2023 and onwards, that expense of $500,000 of salaries cannot be deducted as an expense in a single year. For the first year, only 10% of that expense can be deducted from the business income for income tax purposes. So out of $500,000 of salaries, the business will be able to deduct just $50,000. And that would mean the business have to show $450,000 in income, which would then be taxed accordingly. So in reality, though the business is not earning anything, since it will just be able to deduct $50,000 as expense, from tax purposes, its taxable income would be $450,000. And the estimated tax due would be around $95,000. Now, these $95,000, the business, since it is just breaking even, would definitely not have. And the only 2 logical choices that business would have is either to lay off one of the engineers or to reduce the salary of those engineers so that they could offset that tax deduction. Now, this change in the tax law, it was introduced in 2021 and was supposed to be taken back by the end of the year. But since it was not taken back, a lot of startups and smaller companies were really surprised when they got a huge tax bill at the end of the year. Take, for example, this tweet from a business owner, which said that they actually suffered a $90,000 loss in the business, but ended up getting taxed on $1 million profit. Now, of course, businesses have to make changes in the number of software employees they have and what kind of salaries they are getting so that they could offset these tax expenses. According to the Wall Street Journal analyst, the estimated impact of this tax code change would cost about 20,000 software engineering jobs in just 1 year. When you look at the breakdown of the amortization period over which companies can realize these expenses, it is 10% for the first year, 20% for the next 4 years, and then 10% for the 6th year. So one can argue that over the period of time that companies would be able to get back those tax deductions, but in the first couple of years, this adds in as a huge burden on smaller startups. And if you look at the amortization period for the offshore software resources, it is even higher. Any expense offshore software development is amortized over a 15 years period, which means that the business has to survive for 15 years to fully recoup their tax deductions. Let's see what the future would look like if this tax rule is not taken back. The first very obvious impact would be that this will lead to decrease in hiring for software engineers in the US. And it will be even more true for any offshore hiring. And companies who have already employed a lot of offshore software engineers would be sort of forced to let go of all those offshore resources, and they'll be more encouraged to hire US resources. But even for those, since there are some tax implications because of this law, either the headcount would be lower than before or the salaries would be lower than before. And because of this, companies will also be forced to get some workaround. One option for companies would be that they could incorporate their offices in some other countries so that they could bypass this law. Another option could be that companies try to buy the technical solutions as is instead of paying the salaries so that they could deduct the expense of buying that solution in one go. Or companies can just move the IP of the software they are building to some other country so that they could bypass this tax law. Overall, we are seeing a lot of agitation and protest around this tax law. It is not only counterintuitive, but also very US specific. It is counterintuitive in a sense that every other salary is considered an expense. Only if it is paid to a software engineer, then it is not considered a salary expense. It all of a sudden becomes R&D expense. And it also blanket applies to all software development and does not distinguish between any product development or maintenance, and considers all software development as simple R&D expense. And US is the only country in the world which is taxing software development in this way. Every other country treats software engineer salary in the same way as it considers any other salary for tax purposes. So there is a big hope that in the next year, after presidential elections, there are a big chances that this tax law will be repealed. But if it stays intact, then there is a significant chance of lower software development hiring, especially in the startups, just could not afford these huge tax bills when in reality they are not making any money. I've created a separate video on what I think are some of the other big factors which are influencing the tech job market. The link for that should be somewhere here. Please check it out. I'm pretty sure you'll like it. Thank you so much for watching.